Where is Bitcoin heading? Well, there is no shortage of predictions out there. However, the real alpha comes from studying the data and coming to your own conclusions. Because remember, the first mover advantage is absolutely key. And that's why today we are going to give you 5 of the most important market indicators that you have to have in your toolbox. Indicators that could give you the best sense of direction and sentiment. And we also have a few hints and tips about how to use these. So this is a video you do not want to miss. Before we look at any stats, I need to hit you with some facts. Now, I'm not a financial advisor, so I can't help you get fat stacks. All we can do is provide educational content to help you with that. For any further assistance, contact a financial advisor ASAP. With that said, let's kick off with our first metric to watch, and that is open interest in the derivatives markets. Or more specifically, the total outstanding notional open interest on futures and options contracts. Now, that's a mouthful, but what is it exactly?
What is that?
Well, open interest is the total amount of outstanding derivatives contracts in the market that have not been settled. So, for example, if you open a futures position on Bitcoin right now within a margin of $10,000 and let's say leverage of 10x, your total position size is $10,000. Now that is the amount that is added to the open interest on the market. When it comes to the options markets, it's the total size of the option notional, whether they be calls or whether they be puts. But we'll come back to options in a bit. What's important to point out, though, is that open interest is a combination of both long and short positions, i.e. they do not cancel each other out. But how do you use it to get a sense of market positioning? Well, if open interest is increasing, this just means that more people are opening new futures contracts, both long and short. So one needs to parse the data a little bit more. What is the ratio of long versus short open interest? How is the open interest changing? And what is the price in the market doing? When it comes to that first point, that can be measured by the long-short ratio, i.e. the ratio of long to short open interest on the market. Holding other things equal, the higher the ratio, the more people are taking bullish bets. However, it's also worth noting in which direction the open interest is going, as well as in conjunction with what the price is doing. If it is going up and the price is increasing as well, that's generally seen as a bullish sign. And the opposite can, of course, be said if open interest is increasing and the price is falling. And then when open interest is declining and at the same time price is going up, it can be seen as a generally bearish indicator of a potential market turn. And on the flip side, when the price is going down and open interest is going down, potentially a bullish indicator. But I would not look at each of these individually. Like I said, you will want to view them together with the ratio of long and short open interest to get the best sense of the direction of the market. If you are looking for the best places to see this data, there are a number of websites that track this across both the onshore regulated and the offshore unregulated. My personal favorite is, of course, coinglass.com. Now, while futures open interest is a good first litmus test, the next data point that you'll want to look into is the futures funding rate. Quick bit of terminology here. Funding rates are the cost of keeping a perpetual futures position open. And perpetual futures, or perps as they are normally termed, are those instruments that don't have a defined expiry date. And here's a fun fact actually. Perpetual futures mechanisms were actually first popularized in crypto on exchanges like BitMEX, for example. Anyways, this funding rate is important for these perpetual futures as they are a mechanism used to keep the perp price close to the underlying spot asset. It's the interest rate that is paid from one side of the contract to the other, depending on the difference between the perpetual price and the spot price. For example, if the funding rate is 0.01% and you go long a $100,000 position, you pay the shorts $10. And if you take a short position of the same size when the funding rates are negative 0.01%, then you would pay the longs $10. So what do these funding rates tell us then? Well, generally, when you have a large positive funding rate, it shows that traders are more willing to pay for long positions. It's generally considered bullish. Many consider the neutral funding rate to be 0.1%. So when the funding rate is higher than this, it shows the bullish directional slant. And of course, the opposite can be said if the funding rate is below 0.01%. The relationship between this and the price is really quite interesting, and you can see what it looks like over here with some analysis from Glassnode. For example, currently, although the price has been increasing, funding rates have still been sub-neutral, i.e. market participants aren't keen on opening long positions. Now, while high funding rates could show that the market is bullish, they could also be an indication of it being potentially overheated. And taking a look at the charts on Glassnode, again, you'll see that the peaks in the funding rate preceded massive deleveraging and liquidation events. Something that you may want to look at to get a sense of where the market is relative to historical norms is the funding rate heat map. This data is also freely available over here on CoinGlass, and right now markets are pretty neutral. But back in March, things were red hot.
Bro Crypto Podcast.
Okay, welcome to the Bro Crypto Podcast. I'm Chadimus Maximus, go by MaxChad100 on Twitter.
And I am GigaDick, the dude with the biggest P&L in all of crypto.
Bro, say what? My P&L is 100% bigger than yours.
Bro, please. I was longing Doge and drinking neat Belvedere while you were still spot buying BTC on Mount Gox, bro.
Bro, you're still driving a 2020 Aventador. Where's your Bugatti at?
Bro, when bonk hits $1, I'm gonna be rocking a super yacht while you're still stuck in traffic, bro.
The Bro Crypto Podcast is sponsored by the Coin Bureau Deals page. If you're looking for trading fee discounts of up to 70% and sign-up bonuses of up to $100,000 and amazing discounts on hardware wallets, then don't be a bro, be in the know, and check out the link in the description below. And now, back to the show.
Bro Crypto Podcast.
Bro. Okay, so that's the funding rate. Moving on to our next metric, and that's option skew. Now, in order to understand this, we first have to run through a tad bit of option theory. Call options are options to buy an asset at a pre-specified price on a pre-specified date. And on the opposite end, put options are options to sell the asset on a pre-specified date and time. Therefore, holding all else equal, of course, people who are buying calls are generally more bullish about the price direction of an asset than those that are buying puts. I know it's a bit more complicated than this, especially when you include option strategies, but it's a good benchmark nonetheless. Now, it's not just about the amount of options that are being opened and their respective open interest, but also the relative richness of the puts to the calls, i.e., how much more are people willing to pay for put options compared to call options with similar qualities? And that's what option skew looks at. It's the relative price of puts to calls expressed in terms of implied volatility. And these are for options that have a 25 delta. I won't get into the exact technicalities here, but what that basically means is options that have the same sensitivity in price to the movements in the underlying asset. So putting these together, a low option skew means that people are more willing to pay for calls than puts. And if the ratio continues to trend lower, it means that they are getting even more bullish and are willing to pay even more relative to puts than they were in the past. You can take a look at options with a range of different expiry times as well, just to get a broad sense of market sentiment, but I tend to focus more on the 3 and 6 month options. For example, over here, you can see that since early July, option skew has been falling and becoming increasingly negative. Traders were paying more for bullish call exposure than they were for puts. What you will also notice is that this has almost exactly coincided with that recovery rally in Bitcoin in July, from 56K to about 68K. So it's a really useful indicator that I like to use regularly, and the best place for you to get access to this ratio is on sites like Glassnode. Unfortunately, you will have to pay for a subscription, but I think it's well worth it. Options indicators are just the tip of the iceberg compared to what else they have, especially as it relates to on-chain features. And no, this is not sponsored. I just really like the tools. One other quick note here, you can also look at the options volume and open interest ratios in the same way that you can do for the futures ratios. However, for me, it seems to be less accurate than the skew ratios. Moving on to the next piece of market data, and that's investment vehicle pricing, volume, and flows. Here, investment vehicles are funds that allow people and institutions to get exposure to crypto without holding the underlying assets. And they include exchange-traded products, or ETPs, and exchange-traded funds, or ETFs. Prior to this year, the crypto fund market was relatively small, but the introduction of these ETFs has brought with it a complete paradigm shift. Not only have they been a massive surprise to the upside, but they have also provided us with a lot more data about the shift in interest in these assets. I'm sure that most of you will have been following these ETF flows religiously, and that's for good reason, because the demand for holding these ETFs will translate into demand to hold the underlying assets. Remember that the authorized participants to these funds will have to buy the underlying assets to maintain the pricing relationship. You can also see the relationship play out in the markets. On those days when there are large ETF inflows, the price generally tends to increase. But beyond the price action, ETF inflows and outflows can give you a good sense of how the broader market is positioning. Remember that the ETF investors are not your regular crypto natives. They are TradFi giants and regular mom-and-pop retail. There are numerous websites out there that will allow you to track these inflows, but perhaps our favorite has got to be Farside Investors. And we will leave a link to it in the description below. Not only does it give you the daily flows on Bitcoin, but also on the recently launched Ethereum product. Those are just the ETFs though. We mustn't forget that there are still a number of ETPs and ETFs based not only in other countries, but also holding other assets. One of the best firms that I know that tracks this data is CoinShares, and every week they share the combined flows into all of these funds, and you can view it for free on their website. They break it down by region and asset, as you can see over here. And they also keep track of the week-on-week changes. It's really quite a wealth of information. One more thing that you can look at to get an idea of institutional demand for particular altcoins specifically is the premium that they are willing to pay over net asset value for particular funds. And this premium exists because without an ETF option, these ETP funds allow them to get this exposure in a tax-efficient and regulatory compliant fashion. And that's why you should track the premium on some of these ETPs and how it changes over time. And one of the most notable of these recently has been the premium over assets under management, or AUM, of the Grayscale Soul Trust. And you can see what it looks like right over here. It's near all-time highs. Okay, so that's ETP and ETF flows. But it's time to move on to our final indicator, and it's perhaps one of the most comprehensive, and that's the Fear and Greed Index. I'm sure that you will have come across the Fear and Greed Index at some point in your crypto journey. But for those unaware, it's a broad measure of market sentiment, and hence the name. It's actually something that came from TradFi markets, and the original Fear and Greed Index was a compilation of 7 different indicators that measured stock market behavior. Of course, we are interested in the Crypto Fear and Greed Index, as we know that crypto investors are a different breed of human. Am I right? Anyways, the Crypto Fear and Greed Index was developed by a website called alternative.me, and as is the case with the original TradFi indicator, it draws in a number of sources and weights them. And these are volatility. The higher the volatility, the more fearful the market. Momentum. Generally higher volume with prices going up is seen as a sign of greed. Social media. They look at the sentiment on volumes of tweets and hashtags. Dominance. Generally, a higher Bitcoin dominance is more risk-off for alts and hence falls into the fear category. And Google Trends data. How often people search for crypto and Bitcoin-related things generally shows whether there is broader retail interest. Anyways, they put all of these into a model and they get an index that ranges from 0 to 100. And the higher the number, the more greedy, and the lower, more fearful. So, what information can we glean from this? Well, it could give us a good sense of whether a correction could potentially be due either to the up or downside. As Warren Buffett likes to say, be greedy when others are fearful and fearful when others are greedy. Generally, you'll want to focus on the extremes though. That is the extreme fear or the extreme greed, which happens when it's below 25 or above 75 respectively. It's also helpful to get a sense of how this metric has changed over time. Alternative Me has a chart showing this, and it is free, although I prefer to check out the stats over on Glassnode again, as they are color-coded and you can overlay it with a number of other indicators. When you map it against Bitcoin's price, for example, you can see just how closely they tend to follow each other. Over the past 6 months, local tops have been marked at periods where the extreme greed metric was flashing, and similarly local bottoms when the indicator was in the shitter. Pardon my French. So it's a useful all-round indicator that you will definitely want in your toolbox. And those are the list of the 5 indicators that we wanted to share with you today. However, it's really important to stress that none of these data points or indicators should be used in isolation. You should combine them to get the best sense of the market temperature. You see, trading is all about conviction. And the way that you can increase your conviction is by having multiple different indicators that validate your views. And the sizing of your trades is also impacted by the strength of your conviction. Indeed, there may be other indicators that you choose to throw into the mix, and I haven't even touched on many of the technical analysis indicators out there, and we actually have several videos on that, which we'll leave a link to below for you guys. Whatever indicators, data, and information you do use in your crypto trading and investing, it's important to manage your risk. And that means never investing more than you can afford to lose, and if trading, using stop losses. John Maynard Keynes said it best: the markets can remain irrational longer than you can remain solvent. And as we all know, the crypto market is way more irrational than most. And that's it for our video today. Would absolutely love to get some of your feedback though. So what indicators do you rely on? And would you like to see more videos like this? Maybe a new TA guide, perhaps? Let me know in those comments down below. And if you found this video fire, well then fire up the likes. And don't forget to subscribe to make sure you're next in line to receive my latest crypto vibes. Oh, and hit the bell as well. We don't want it to get lonely now, do we? That's it for today, my fellow crypto fans. Gotta fly.